Hello, chart watchers, and welcome to this Friday, June 22nd Market Watchers Live show with your hosts, Tom Bowley and Erin Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, this morning we've got the Dow Jones Industrial Average leading the market for a change after 8 consecutive days of moving lower. You can see the Dow Jones up 169 points today. The S&P 500 up about 11.5 points. And the NASDAQ and the Russell 2000 lagging for a change, actually down 10.5 points on the NASDAQ. The Russell 2000 up by just 1.6 points. The 10-year Treasury yield currently up about 1.5 basis points, sitting at 2.91%, continuing to consolidate in a pretty fairly narrow range throughout this week. It's been mostly from about 287 or 288 on the downside up to about 293 on the upside. So really not a whole lot of movement in the 10-year Treasury yield this week. Volatility index after a huge spike yesterday, coming back down about 8.5% today to 1340 as it continues its overall downtrend. Energy having a huge day today, up 3%, easily leading on the sector leaderboard. Materials also strong, up a little bit more than 1%. These are two of the areas that have really been hit hard over the past 7 or 8 trading days, as we've seen trade tensions and some geopolitical concerns, the rising dollar. All of that has taken a toll on these two groups, but we are seeing a rebound today off some oversold levels. Technology taking a break. You can see we remain in a flag pattern, had a nice flag pole moving up, and we've been trading sideways for a bit. We are off our earlier lows, but the technology group at last check was the only sector that was in negative territory today. The Dow Jones Oil Equipment and Services Index, the big reason for the move in energy today. All the industry groups in energy are higher, but you can see a huge move up. But we are testing overhead resistance at that 20-day moving average. We'll see whether or not the group can get through. And for the highs and lows on the S&P 500, start with CarMax. Great earnings report. The market is rewarding the company. Big push up above some long-term resistance. We'll take a look at that in a bit. But the stock up almost $9 today. Very big move for CarMax. On the flip side, though, Red Hat. Red Hat came out pretty shocking. It's in the software space. They had a pretty good report. The problem was their guidance wasn't so great. We'll talk about that one in a bit as well. You can see Red Hat down $20 today from a close yesterday at 165, and it is currently trading a bit over 145. Okay, Erin, it's Friday. It's time for the weekend. I'm spending the weekend in Wilmington, North Carolina, which is a East Coast beach town. How about you? What are you up to this weekend?
Excellent. More family. I've been back to my parents' house 4 out of the 7 times so far this week, and it'll be 5 tomorrow. So wow. Lots of family in town from both sides. It's been actually pretty fabulous to see everybody. It's just a little bit exhausting, though, when you have quite a bit of family all at once like this. But hey, that's the way it works, and I'll take it because I love my family.
Yeah, it's always nice to get together with family.
Yes.
Looking at the market, I mean, you know, we've had the Dow Jones underperforming for 8 straight days. Now, all of a sudden, they flipped the table, and we got the Dow outperforming for a change. That's something unusual.
Yeah, and Amazon doesn't seem to be too concerned about the new taxes that are going to be coming on for the states on the online processing. I was thinking we might see a little bit of a dip there, but mostly unchanged. So
yeah, those kinds of things, when you get headlines, the bad companies get hit, the good companies, it's a buying opportunity.
Mm-hmm.
I actually have a few stocks in just a couple of minutes I'm going to go over about that Supreme Court decision and how they reacted yesterday. We'll talk about that in a couple of minutes. I'll let you get into the schedule and the agenda, and then we'll get the whole part.
Jam-packed week next week, as usual. Tom, you've got a workshop on Tuesday, subject, I guess, to be determined at this point. TBD. Scott Carney from the Harmonic Trader will be with us on Wednesday as our guest. And Thursday, Dan Russo from Chaikin Analytics. He does the Power Feed show on the StockCharts TV. If you haven't caught it, you might want to. But today, what are we going to cover? As we've been announcing, we have the scooter report and anatomy of a trade. So I know we have some interesting trades to look at. I have actually one that I have made of the 5 that I'm showing. It's actually in process. 10 and 10 to 1. We'll be starting off with KeyCorp. And finally, we'll finish up with the decision point sentiment update, and still very interesting sentiment out there. Looking forward to sharing it with you. However, let's go ahead and first get started with those technical headlines and news. As you said, that Supreme Court ruling will be interesting.
Yeah, that's going to play out over time. First, let's take a look at the June PMI composite flash that came out this morning. 56.0, market expecting 56.3. That was really the only economic report that came out, and I wouldn't even say that that was a big one. So the bond market just kind of yawning today. It's been yawning most of the week. 10-year Treasury yield really trading in the 290s most of the week, low 290s. And still waiting maybe for that next big move. I would look for the low back at the end of May, and especially the low in early April as key support levels. And then, of course, the multi-year high that we reached back in mid-May to the upside at 3.11% is going to be a key area. In the meantime, right now, we're sitting almost squarely in the middle of that range. And so the 10-year Treasury not really doing a whole lot. I'm sure looking, obviously, for more signs, more economic signs as we move forward. One thing I did want to talk about, though, and I pointed this out in my blog, so I'm going to go ahead and it's easier to go from the blog and show you a couple of things that I wanted to address. But the current outlook to me as a short-term trader kind of changed yesterday. I didn't like the reversal on the dollar index. We had a major breakout on the dollar above this neckline. And you can see we came all the way back down, closed at the low of the day or very close to the low of the day. I'm not saying the dollar isn't going to go right through 95 because I remain very bullish on the dollar, and I think eventually it's going to happen. But short term, some of the effects, of a dollar rising, which we have seen throughout the past couple of weeks. We've seen, small caps continuing to outperform. We've really seen gold struggle. We've seen energy and materials and industrials all struggling because of the trade war and the rising dollar. There's just a lot of things that have been going on for the past couple of weeks. And this has the potential to change that, I think, in the near term. So I was already speculating earlier in my blog that I thought the Dow and the S&P might take over leadership here in the near term, and the Russell 2000 would kind of pull back. I think that's going to be a short-term phenomenon, but as a short-term trader, I think that's pretty important. Now, if the dollar were to make another breakout to the upside, then I would go right back to that old trading strategy. For me, because of the way the dollar finished yesterday, I actually exited my IWM trade. Didn't include that in the anatomy of a trade. Well, I've got some other trades we'll talk about there. But this was just an ETF that I had put in one account because I did feel like with the dollar rising that we were going to see outperformance in the small cap. So I wanted to have a little bit of extra exposure there. But I did sell it based on this reversal yesterday. If the dollar were to close back over 95, I'd get back into it. But in the meantime, in the short term, I think maybe we'll see underperformance by the small caps. And rightfully so. I mean, the group is on a relative basis very overbought. Let's see. So if you pull up this chart, of course, the dollar index won't update today until after the close, but you can always go from those blog charts, anyone's chart, and click, and you'll get the latest. So you can see with the annotations what's taken place. So just wanted to make sure everybody was aware of that. The S&P 500, I did point out the last 8 days, the bifurcation that's taken place in the market. You can see the S&P. This is a 30-minute chart over 8 days or 7 days, and you can see the move to the downside. And when you go through and look at the various sectors, you can see technology's been down about 1.15%. Consumer discretionary has actually been up, even though the S&P 500 has been going down day after day. Industrials, though, have been hit hard, down 5% in the last 7 days. Financials kind of middle of the road, down about 2.3%. Energy down 3.3%, pretty rough there. Materials down 5%, rough there. Healthcare doing okay, kind of hanging in near the flat line. Consumer staples positive, and the biggest winner of the selling recently has been utilities, moving up 3.4%. So with the dollar reversal yesterday, I'm actually thinking the S&P could make a rebound here. And with that, I think we should be looking for some of these groups like materials like energy and like industrials, maybe to get a little bit of a rally as money rotates back away from the small caps, assuming, again, that dollar index does not make the breakout above 95. That, to me, tells me all bets are off. At that point, I'd want to be in the small caps. But at least for now, I think that candle is a signal that perhaps we are going to see a reversal there. I did pull up the industrials, and so I kind of gave you a view of maybe what might happen with the industrials based on just the fact that we're so oversold and the fact that we might get a pop in the S&P and the groups leading to the downside may reverse and begin to lead to the upside. But there's also another reason to like the XLI here, and this is going back on a 2-year weekly chart where you can see we broke out above the October 2017 high, really never looked back. We went from 72 to 80. That was a quick 10% pop in about 2 months, and we have since been consolidating since January. And notice we haven't had a weekly close below that 72 level. Yesterday, we closed at 72.36. So we are getting close to a key support area. And you can see we have bounced back a little bit. This is the weekly candle, but we have actually bounced back a little bit more today, getting back closer to 73 after an intra-week move earlier this week down to 72.11. Okay, a couple of things to talk about in the market today. First, I mentioned the U.S. Supreme Court. Yesterday, they ruled that states can require online retailers to collect sales tax. And this overturned a 1992 decision that said they couldn't. So this was pretty big news. So you got to think about some of the stocks that might be impacted. How about eBay? eBay yesterday, pretty big move to the downside, down $1.50. And you can see this is a stock that really hadn't been performing very well since early February. And if I pull it up on my relative chart, this is in the specialized consumer finance space, or specialized consumer services, I think, space. Look at the index itself, rising. And after the gap up on eBay back in February, it's been declining. So what does that mean? It means eBay on a relative basis for the past 4 months has been an awful stock within this space. And it's been awful relative to the S&P 500, even though its group has recently just broken out to a new high against the S&P. So eBay is a weak stock, no matter how you look at it on this chart, has been a weak stock, especially over the last 4 to 5 months. So when the news hits, this is just another reason to sell a relative weak performer. Overstock. I'm going to keep this relative chart up so you can take a look at Overstock. Overstock is in the specialty retailers, and look at Overstock, or look at the specialty retailers making new highs. Of course, this is home to Netflix and some others. But Overstock, while the group has been going higher, look at what Overstock's been doing. It's been going down. So clearly its relative strength is weak, even though the group's relative strength is strong. So the news hits yesterday, the Supreme Court, and we see selling. We see more selling on Overstock. So eBay and Overstock, it's just a reason to sell. In the case of Overstock, we were up against resistance when the news hit, and we have sold off $5, more than 10% over the last 2 days. On that news. Now let's take a look at a couple of stocks that are pretty strong, that have a pretty important online presence. I think you might have heard this company before, Amazon. Amazon, as you look at it, has been going higher. It's barely budged lower on this news. It's in a very strong group, and it's a leader in the group. It's a leader relative to the S&P, and the group is a leader relative to the S&P. So the bad news comes out, and Amazon barely flinches. I think it's typical. Wayfair, this is my last one I wanted to show you in this, but Wayfair, has a tremendous online presence, and Wayfair has been going straight up. Look at that move, and I don't know, maybe we'll take a look at the intraday in just a second, but Wayfair is moving up. It's considered a home improvement stock, so it is in the home improvement space, which has been rallying. On a relative basis, this stock over the past 2 months has been on fire, relative to the S&P on fire, and home improvements over the last few months rising as well. So we have been seeing some really good action here. Wayfair has barely budged from where it closed 2 days ago. So the strongest of the strong, Amazon and Wayfair, barely get hit to the downside. The two stocks that are not performing well and haven't been performing well, eBay and Overstock, both get hit hard with the news. So again, just a subtle reminder here, what relative strength means. When you have a stock that's very strong and it starts to pull back a little bit, you get buyers in. These other stocks that are relatively weak, when they get bad news, there are no buyers to step up and the stock just sells off. I'm going to pull up the, let's look at the intraday. I don't know if that was a true move down. Well, it does look like it hit pretty hard on very heavy volume early, but it rebounded and came right back up. The buyers jumped right back in on Wayfair. All right, let's take a look at the food area. We talked about this index yesterday. This is the food retailers and wholesalers group making a big breakout above the high back in January. They're extending it today. So we're seeing stocks like Kroger's, which had a really good day yesterday on earnings, continuing to push higher, and another solid volume day here as well. Talked about the likelihood that Kroger was going to go up and test this January high around 31. It got up to 30 earlier today, so it's getting close. The other group that I talked about yesterday that I wanted to keep an eye on, media agencies. Looking at this, look at this candle today. Now, we have seen intraday moves in the 570s before with big reversals and then subsequent weakness. So let's see what happens to the media agencies group today. But this is in the consumer discretionary space, which I like. And if we start seeing better technicals here, we could begin to see more and more money rotate into this group. So two of the stocks I mentioned yesterday, a couple of small stocks, NCMI and MCHX are a couple maybe to take a look at. Also, I've talked in the past about Quinn Street, QNST. That's another one in this group that has my interest as well. Let's see. What else do we have? How about Medtronics? Let's pull up this chart. Now, it looks like it's just trying to make a breakout above 88 here, which was the early June high. But I'm going to pull up a weekly chart because Medtronics, this is a pretty big area around here. 85 to 86 high back in 2016, 87.5 high the middle of last year, 87.5 high earlier this year, and here we are again. We're getting close. Medtronic today received FDA approval for a closed-loop system for pediatric diabetes, and then also increased its quarterly dividend to 50 cents from 46 cents. It's a pretty sizable increase to the dividend. And one thing you can do, I'm going to add this to the chart so you can see this. Under the indicators, if you take a look at the dividends, if you just pull up the dividends, and I'm going to make that pretty big and move it up on the list here. And let's go back even further. Let's go back, well, let's do 10 years. What this will do, and especially if you're a long-term investor and you're interested in dividends, this tells you the history of these various dividends going across. So you can see that MDT, in addition to a really strong stock that's gone up 4 times in the last 9 years during the bull market, it's also been steadily increasing its dividend. So I think this is the type of a stock you want to consider from a longer term perspective if you're more of an income oriented investor or trader. All right, I mentioned a couple of stocks at the open. CarMax, KMX. This is a company that reported earnings yesterday after the bell, or actually, no, it was this morning before the bell. Revenues, $4.79 billion. Market only looking for $4.60 billion. Bottom line, 133 versus 124. And look at the breakout. Look at the heavy volume. And look at this longer-term chart on CarMax. Actually, I'm going to go back into a longer-term monthly chart. This is a pretty significant breakout today. We've struggled to get through the 70, 75 area. Currently, CarMax trading at 80. This looks like a major breakout to me on some increasing volume today. The other one that I wanted to mention is Red Hat. Red Hat, I actually thought this one might have a run into earnings, and I'll talk about this one a little bit more in my anatomy of a trade later. But this is why I don't hold a stock into earnings. Red Hat, huge move to the downside. They lowered their guidance going forward. Another stock that was getting hit pretty hard earlier is SGH. This company beat top line, beat bottom line, and raised guidance. And the stock's down 11% today. It's like, what more do you need to do? The other one was BlackBerry BB. Also came in with better than expected revenues and earnings. And look at what's going on. Stock down 9%. So it doesn't matter, even companies that you hold that report good earnings. Many times they still sell off. Okay, that's all I had for today's technical news headlines. We're going to move into our scooter report. So, Erin, I'm going to let you take it away.
All right. Thank you very much. All right. I'm going to start with using the top up, top down for the scooter report. Excuse me. And you can get that right here on your board, right on the member dashboard. And right here is where you can get your scooters. There's also the scooter report over here, but I am thinking, Tom, you might be covering that. We'll see. So I like to look at also what's moving, the scooter movers, as we talk about them. Top up, which have the biggest changes to the upside, and of course, which ones have the biggest changes to the downside. And you can also choose, what area you might want to look at as far as those top up and top down. So I'm going to go ahead and do this. And I normally look at the candle glance, but today I'm going to use the mini charts that you can get just by hovering over the symbol. So here are the big movers. And one of the things I'm looking for is an improvement up until, up to those 70s, maybe 60s. I'm sort of looking for that as my scooter basis here, but I'm also obviously looking at which ones have had the biggest change, because that's why I'm looking at this part of the member dashboard. But what I want to do, because sometimes you end up, especially when we start looking at the US ETFs, which I'll start with first, is there are a lot of them that are very, very thinly traded. So what I like to do is, once I've seen this, you can pull it up in candle glance, but I'm just going to go through really quick, and you just can hover over it. And that just gives you a really quick view as to, what's going on, why is it changing so much, and you can also tell if it's, thinly traded. Let's find one in here. I know there's like this one. You can see when you get these, this is a great example, OIIL, very thinly traded. Our volume today is 505. So more than likely, since I'm not interested in really low volume stocks or ETFs, I would not want to look at this, and I don't have to, because I'm hovering over it, and I know just by looking at the trading here that it's not something I'm going to be interested in. So I'm just going to come down here, and one of the ones I was going to look at, so these are the ETFs. Like I said, I want to see some in those 60s, maybe have risen to the 70s, or just in that mid-range. I mean, this one's moved up 38.7, but it was, it's at 51 now. So this one was pretty much in the basement. And I'll go ahead and pull it up just so we can look at it, since it is our biggest mover today. And we can see it's been in a really difficult decline, since mid-May. And we did get that bounce right here. I'm going to actually annotate this one, because I think this one's pretty interesting. The oil services. And I think, Tom, you were mentioning oil services is moving today. Let's see. I'm going to go with my opaque, or not opaque, see-through here, transparent. All right, so this is a really important area. I mean, look at how it's been holding as resistance for all of these months, and then it's come down and it's bounced. It did dip below, but it did bounce back up. Now it's looking at that 20 and 50. Here's that the scooter move right there. Nice big move up there. I would look at it just because I have that PMO is now tipped up, and it didn't have to go all the way down into that very oversold territory. So I would find this one very interesting. You've got a 50 that's still over the 200. So this one could be an interesting play, because we do have that big move up, and it came right off of this very important area of support, previous resistance. So I like this one. I think that it's setting up pretty nicely. All right, so let's go back to the member dashboard. And let's look at some of the large caps. Let's see what we have here. Okay, so here's here's a few in the 70s here, so those might be interesting. I'm going to hover over them, just see what we got here. Okay, that's a huge gap up. That would require, in my opinion, just looking at it, a bit of a pullback before I'd want to get in. I don't like to get in on a big gap up like that. So I'm not going to even look at that one. There's a gap up as well. Let's see, TOT. And these are all going to have a lot of gaps up, so we're just going to have to look for just the right setup here. That one looks interesting. Here we go. So there's the reason it hit the scooter mover table. This PMO is now starting to decelerate and starting to turn up just below the zero line. I would like it to be above the zero line, but it's close enough to show that there is some internal strength going on there. And let's go ahead and annotate this one. I do think this one looks interesting. BHGE, Baker Hughes. And I like to get that transparency on my line. So basically all you have to do to get a transparent, here we go. See how I have mine? It's kind of transparent there. I like to set that up. We could see that was an area of support recently. Yeah, that matches up with some of the resistance. You can see it was support previously, but I like to have a big fat one because you can, you have some play there on the actual tops. I like to look at support and resistance zones more so than, the actual, where it's at as far as the price goes, as far as that support level, because I'm more of an intermediate term trader, so I don't feel like I need that exactness. I just want to know, what the zone is. So the only issue I have with this one, I can see the 20 is getting ready to cross below the 50. And that's not the kind of thing I want to see. Of course, that means price has been trading below the 20 and 50 for a while, but we've gotten back above the 200. And like I said, I think the PMO is looking interesting here. And if we get a move up back above that 50-day EMA, we could very well avoid that negative crossover, which would be, as far as decision point is concerned, an intermediate term trend model neutral signal, because it's occurring above the 200-day EMA. So I wouldn't want to go aggressively into a sell. Short-term traders, those who like to short, you can use those signals if you want as a buy or sell. All right, so Baker Hughes I thought looked interesting. Actually, I'm going to also draw a trend line here. Declining tops, see what we got lining up here. And I want that thinner and with no arrow. So there you go. So we haven't hit that area of overhead resistance. So there's a little bit of work that needs to be done here. But the fact we're getting that big move on the scooter to the upside, and you can see that we have the PMO starting to turn up. This is certainly, in my opinion, worth a watch list in any case. Let's see. I want to give you enough time to cover some, but I'm going to look at one more because we did the large caps, we did the ETFs. Let's look at some of the mid caps. We don't give them much love. Wow, that's a huge move to the upside. And there you go. This one's hit all the way up here to that area of overhead resistance just on this one move today. 20% move up. Yeah, I'm not going to be trying to play that. So again, I'm just that's too thinly traded. Okay, that's a pretty big gap up, but it looks like it might have tipped up above overhead resistance here. Let's take a peek. All right, so it's gotten itself right back up above the 200, and look at the EMAs. They're all starting to move upward. They're trying to make their way higher. We've got the PMO buy signal. Now, we can see that there's overhead resistance here at $4. This is also somewhat thinly traded. And when you're looking at a low priced stock, of course, you might be vulnerable to these big swings like we were today. But there is some overhead resistance here. It's a lower price stock. There's a lot of risk involved here. So for me, I would be passing on HOS. So let's find one that looks, oh, that's a nice breakout from a declining trend. So I want to look at XOG. Here we go. And it was in a deep, deep decline. And, in that oil and gas area where we're seeing that improvement, the PMO is turning up above the zero line. We already saw a flattening OBV here. So I thought I was looking at that just from the corner of my eye there. And that's positive, to get that flattening out. We're not seeing that declining volume quite so heavy. And then we've now got this breakout. We're getting that big move on the scooter. 50 is above the 200-day EMA, 20 is above that. So I'm liking that setup. And you can see the 5-day passed well below, the 50, and it's obviously heading straight up now. So I think that shows you obviously that the rising trend, even in the very short term, is looking good. Now, of course, this is again a 7% move. Put it on the watch list. More than likely, you're going to get a pullback on this one. I don't see it running that much more quickly to the upside. So I'd keep an eye on this with that watch list. We're also seeing it sitting here right along this overhead resistance line here back from November and January. All right, Tom, I'm going to pass it back to you. So hopefully I didn't take up too much time. I know you have a few to look at too.
All right, let's take a look. I'm going to go into the scooter summary. So from your, the Pro Control Center is what I use, but from your members dashboard, if you click on the scooter reports, I'm going to kind of go off of what I talked about earlier. I think that because the dollar is reversing and because energy was hit so hard recently, I think energy is an area maybe to consider here in the short term. So I'm just going to type in energy among the large stocks. Now, keep in mind, again, look at large caps because they've been beaten down, and I think we might get a little bit of a rally here. So if I type in energy into this search box, you are going to see the top scooters of the large cap stocks that include energy. So here's the energy sector. Now I'm going to go through a couple of these stocks that I think look particularly interesting. First, Anadarko Petroleum. I noticed earlier, first of all, we have equal highs coming across, rising lows. So we've got an ascending triangle off of an uptrend. That's a bullish pattern. We're getting the breakout here, and we're doing it with increasing volume. That's a good sign. This stock looks to me like it's ready to run to 78. That would be $6 measurement from the top of this triangle down to the bottom. And so it's on its way. It's at 74, but I think it's got more room to run here. CHK, this is the Chesapeake Energy. All of these are coming off that same report that I just showed you. I'm just going to go through these stocks pretty quickly. Once again, off of an uptrend, equal highs, rising lows, ascending triangle. We are breaking out above 5. Volume is beginning to pick up. Already 28.5 million shares. We're not quite to the halfway point of the day. So it looks like we're going to be over 50 million shares, which would be an increase in volume to confirm this breakout. So CHK, I think, looks very good as well. HES, this is Hess Corp. After moving to new highs, we went back, tested the area of the breakout, all the way back to the 50-day moving average, PPO back to the center line support. Now we're starting to turn up. This looks like a little bit of a cup. Maybe we hesitate a bit about 65.5 to 66, but I think eventually we're going to make a breakout, and this one ultimately would measure up to about 74. CLR. Let's take a look first on this daily chart. Now, here's one that had been in a nice uptrend, was kind of sideways consolidating. I think maybe did perhaps some kind of a Wyckoff spring here where we broke down below this price support and then came right back up, and now we've reclaimed it with today's gap up. And on a weekly basis, I think CLR looks very interesting because after breaking out above this 60 area, you can see the double top. We took that out back in early April. On the pullback, we tested the $60 level and the rising 20-week moving average, which has been great support. So CLR, I think, looks very bullish here as well. Let's pull up NBL. This is Noble Energy. NBL, after a big move up, another breakout, we came back, tested the top of gap support, and it looks again like this could be perhaps a rounded bottom for a cup, or maybe left shoulder, bounce to put in the neckline, head, another bounce here to put in the right side of the neckline, maybe one more pullback, but this is another one that I think looks good and potentially could be ready to pop. MUR, this is Murphy Oil Corp, trying to make a breakout. Now, so far failing, but if we can reverse later today and move back toward the open, or better yet, back above the open, I think this would confirm a very nice breakout on MUR. RIG, R-I-G, this is Transocean. After a nice breakout, you know, when I look at this stock, and if I posted, I'd probably get comments about this maybe being a topping head and shoulder pattern. Left shoulder, neckline, head, right side of the neckline, and then this move back up being the right shoulder. That's great if you think the market is topping and going lower. I'm very bullish. I think these topping patterns are useless in a rising bull market. So unless, I'm not saying I would ignore it if it broke down. I think that's something certainly to pay attention to, but I'm not expecting it to break down. I'm looking for the market to continue moving higher. I think many of these energy names can lead it. So I think that this is a sizable breakout here, actually, above the moving averages as volume begins to pick up again. Okay, let's go ahead and just stop it right there. And we can take a quick look at the stocks that Erin and I discussed. We took a couple of different ways of looking at it in terms of our scooter reports. Erin was looking at it from the scooter changes, and I was looking at it more from a standpoint of taking a look at kind of a theme, which is the energy stocks being hit so hard recently, thinking that they're going to rebound and money may be rotating back into the large caps in the near term as well. And so tried to highlight some of the better performing large cap energy stocks that I think might give you a little edge in short-term trading.
There you go.
And there it is. So we will move on. I know we've got up next Anatomy of a Trade. Erin, I'm going to let you go ahead and start that segment for us.
Absolutely.
I know you said you have one that you actually are trading currently.
I certainly do.
Okay.
Let me go straight there. Okay, so the one I'm actually in, and I think I mentioned it, was it yesterday we went over these? Or no, it was the day before yesterday. I decided this was actually one that I had put on under the radar. I think that was what we were looking at. And as I was looking at it and looking at the market action at the time, I decided that I liked it enough, I was going to go ahead and pick it up. So let's go ahead and look at what it is. For all of these, even if they're paper trades, I'm going to act like they're one of my regular trades. So this, I will always tell you where I bought it at. I always set my stop right off the bat. I set a reevaluation place, which is sort of like an intermediate target, so that I can take a look if there is a pattern that I want to watch. And then I always have my target. So I'm going to go through them and I'll explain those a little bit as I go along. So the reason I got in, and I think I put it up here, I gave myself whatever the high was for the day. Actually, no, that was exactly what I bought it for. Take that back, because this is one of my actual trades. All right, so I got it at 22.86. Obviously, we're not where we want to be at this point, but my stop is at 21, and the reason I set it there is, 21.50. I think if you're going for a shorter term trade, you could go there, but I have a feeling that it would probably, if it goes just below that, it's going to stop out a lot of people. And so I'm willing to let it go a bit further, because again, I'm more of an intermediate term trader. So I'm going to allow myself to come back a little bit further, because I don't want to get stopped out on my intermediate term trade, especially when I'm looking at an upside potential here of $24, which is my reevaluation period, and my target of 26 up here. So I'm willing to take that hit, because it's going to be more of an intermediate term trade. And, that's all about your risk and reward. How you want to deal with it, but in an intermediate term function, I will let it pull back. Obviously, if I start losing the 50, if I start losing the 21.50 area, I watch this pretty closely. It's one of my actual trades, right? I'm sure everybody's, well, you've got a PMO now that's top below the signal line. Yes, I do. I don't necessarily use the PMO as my guide once I'm in. It's really for me to help me catch that momentum up, because there's going to be a lot of moves. I mean, look at back here, you've got some that come up and down. It's going to be a little bit twitchy. So I'm not going to get too over the top worried about this, because honestly, I use the PMO to get in, not necessarily to get out. But if you are watching your trades very closely, if you're doing a short-term trade, I would tighten the stop at that point. I would definitely have it at least 21.50, maybe 21.75, because it's shorter term. I still would like to see that 24 hit, but I'm willing to take that early out, because I want to reinvest it somewhere else if I'm a short-term trader. But I'm okay tying up some of that capital. As I said, I'm in this as an intermediate term trade at this point. Let's look at a few others, and I'll go through those fairly quick. I know this one was requested as a I think a 10 and 10 to 1 earlier. So I decided I'd pick this one up. I think I'd also made this one of my, I think this was a Monday setup. I can't remember. So anyway, I liked it. Obviously, the PMO had started turning up. You could see OBV was starting to make a run, get past these previous tops. The scooter is just about ready to get in the hot zone. So I'm gonna, again, this would be a paper trade. This is one, like I said, I think this was a Monday setup. So I had 2601 as the purchase. Stop I made at, let's see that, yeah, 23. And again, I'm pulling it down. I'm looking for a lot bigger move here on my intermediate to long-term trade. So I will accept a big drawdown because I don't want to get stopped out, because I know that I'm going to see this. I'm willing to take that risk because I think the reward is that high. So what I would do at this point is my stop, like I said, I would have set it pretty low here at about 23, where we had the drop here. And again, I don't want to get stopped out at the place everybody is getting stopped out. So that's why I would set it a bit lower than that support level. It's just my way of doing it usually. I'm going to reevaluate it when I hit 28 or near to 28, because that's my target coming up. So this one's turning out pretty good, obviously. And if I get a really good breakout above that overhead resistance here, which is just below 28, I might consider selling it back. But if I get that out of there, these look pretty good. All right, I'm going to just go through the others really fast. So this was this is 2 weeks ago pick. And wow, see, I would have gotten stopped out if I hadn't set it low enough, because the low today almost got to that 74. But I managed to hold on to it at this point. So again, paper trade. So my stop would have been, as I said, $74. I got in at 75.75, right here. And the target is 80. Now, had I been holding this one, it looks like we just about had gotten to 80. At that point, I might have reevaluated and set up, sold part of it. And I think life storage, I thought, was an interesting one. I like that setup. We got the breakout on this one, 95.82, stop just above this particular area of support. And that's because I was looking at this as more of a short-term trade. And I'd reevaluate at 100, and that's basically because I came off the weekly chart, and that told me where the next levels of overhead resistance were and might be. And look at that PMO on the weekly side, looks pretty good. This was my Monday setup, and it is doing well. Very happy. Got an 1805, currently 1870. Reevaluate at 1950 at that first area of overhead resistance, determine if everything's looking pretty healthy, and then the target would be 21 on that. And I think that was all of them that I went through. Yes, I believe so. Your turn.
Great. Let's take a look. Got a couple. First, I'm going to go over stocks I'm currently holding. One is Roku. This is about to set a record for the longest I think I've held a stock, probably longest I've held a stock in 2018. But it's just, I think I was talking to Greg Schnell recently. It's just one of these stocks that just hasn't allowed me an opportunity to sell. It's been doing really well. But they came out with earnings. They posted better than expected top and bottom line. So, of course, it went on my strong earnings chart list. And when it came back down, tested the 20-day, it actually went below and came back up above. When it came back down and tested the 20-day moving average, I got into it and has not closed below the 20-day moving average since, and continues to push higher. And as it moves higher, it's had some excellent volume. I know there's also been some rumors maybe that Netflix might acquire Roku. So I think there are a number of different factors. I think their number of subscribers has been raised. I think one of the analysts said some good stuff about it. So anyhow, the stock has been performing really well. I'm continuing to watch the rising 20-day moving average to the downside. To the upside, it's got gap resistance up at about $51. If we get there, I am likely to take it no matter what the volume is, just to kind of maybe let it settle back down, maybe get back in at a lower price. But for now, I am holding, even though I did look at yesterday's candle, and I probably could have predicted a down day today because of the bearish engulfing candle. So I'm kicking myself a little bit. But there have been a couple of other times. I know on this particular day back in earlier in June, intraday, the stock was not doing well at all. And I was like, wow, I don't want to give back all of my profits. But then stock reversed. And so holding a little longer made sense. So this one's been a tougher emotional trade because I don't like to hold this long, but it has continued to perform well. So I'm going to stick with it. ALXN. This was a setup from, I don't know, maybe 3 weeks ago, early in June. A couple of things here with Alexion. First of all, I really like the biotechs. I own the IBB, and actually I own a couple of biotechs. Alexion is one. On the pullback, I think it was early June. I think it might have been in this time frame that I did the setup, and it did pull back to the prior low, hit the 50-day, and since then it's been straight up. I think this one's making a run for 137.5. Alexion and the biotechs both have very, very strong seasonality this time of year. I'm going to pull up Alexion's seasonality. It's very strong in June, but it's even stronger in July. June 6.3 average return over the last 20 years, going up 55% of the time. In July, it's actually ended July higher 74% of the time, and it averages going up 7.2% per July. So you've got a strong seasonal stock, and you've also got a stock breaking out. So I think ALXN continues to look good. I'm going to hold it for now, although I will raise my stop to the area of the breakout that it just had. Regeneron, now this is one that I just added, and I added it on the breakout here. It's one that I've been watching for a long time. This is one of the best performing, well, until recently, it was one of the best performing stocks in the NASDAQ 100. And it had just been going lower and lower and lower. And I've been waiting for some signs that things were turning around. When we broke out above this prior high, pulled back, held the 20-day, got that golden cross, and you can see the volume picking back up to the upside. I think that's a pretty good sign here on REGN, and I like the biotechs. So this is one that appears to be breaking its downtrend, trading much more bullishly. So I like this one. And then finally, IBB, which I just mentioned, it continues to trend up above its 20-day moving average. That's my stop to the downside. I'm looking initially for 115, so I may take profits at that level. Now, a couple of recent trades that I've had. VRAY, I could have taken a lot more of a profit back when it was doing very well here. This is another one that had reported great results, pulled all the way back. I was able to get in just a little bit below 7, had the stock go up to 8, and then when it came back down and it lost its 50-day moving averages 2 days ago, I got out. I'm looking for re-entry, but I think I can probably get it around 675. I think another thing that could help this stock is at some point when the dollar breaks out, money rotates back into small caps. Hopefully 675 comes first, though. Two others or a couple others. We'll see if I can get these in quickly. Red Hat, I mentioned earlier. I'll go ahead and talk about it. I didn't like the close below the 20-day. I was actually trading this one right off the 20-day, thinking we might get a pre-earnings pop. So the very next day when it closed below the 20, I went ahead and got out. It had a little bit of a rough day yesterday, but then this is an exclamation point why I do not like to hold stocks into earnings. Red Hat down $20. And not only is it pulling back, but also the software group has been pulling back a little bit here in June, showing some underperformance. We hadn't seen that in a while, but it's probably going to set up for some strong stocks in this space over the next couple of days to couple of weeks. Garmin, this is one that I initially was looking for to go back up maybe to about the 62.5, 63 area to test this high. It had gapped up with earnings, went all the way back down. I think this also was a Monday setup that I used. This one would have been back in May, probably right at about this point. So I'm guessing somewhere in the 58.5, 59 area, mid-May, it would have been a Monday setup. But anyway, I own this one. When it got up here and printed this reversing candle, you see this tail up here above this resistance area, came back down, reversed. I sold that day. It did go back down to the 20-day, came back up one more time, and now seems to be drifting lower. I think it's just sideways consolidating as it has over the past several months. I think it could maybe even make its way back down to 59, possibly 58, but 59 would start to get my attention again. And then the last one, I got stopped out on Lennar, LEN. This one had gone back up. I was really looking for home builders to maybe begin to rally. They actually broke back down again. and I think testing key support right now. But Lennar, after moving above the 20, I was looking for this PPO to break above center line and for rising 20-day to hold. It did not, and I ended up taking a small loss on Lennar about a week or so ago. And those are the stocks that we went over for the anatomy of a trade. So we were able to get through quite a few of them. I hope that hope it helps everyone for us to give you some of our trades, some of which that we actually traded, some of which maybe we've discussed trading in the past. But there is a list, several that Erin went over, and then also several that I went over.
Yeah, and quick question from the chat room. What percent of your portfolio do you use for a specific trade? For me, it just depends on the account and how aggressive I am. And I answered, between 5 and 10%, just depending on which account and, how many positions I want to hold. But typically it's right around there. What are your position sizes typically in percentage?
Well, that's a really difficult.
Hard, right?
Well, it just depends. It depends on a lot of things. But I follow Warren Buffett's thoughts in terms of diversification. I don't know if you've heard, but he had a quote. He has a quote about diversification. He said, "Diversification is protection against ignorance. It makes little sense if you know what you are doing." And so if I think that a group is going to go higher, and I've got technical indicators telling me that, and I know where I want to keep my stop in case I'm wrong, I don't necessarily want to be looking at another area of the market that I don't feel good about just to say that I'm diversified. I want to, from a momentum standpoint, I want to be in whatever I think is going to go higher. And so there are times like right now, I mentioned earlier, I have Alexion Pharmaceuticals, I have Regeneron Pharmaceuticals, both up biotechs, and I have the IBB. So I'm very heavily concentrated right now in biotechs. And, if I told you the percentage that I have in biotechs right now, I think probably everybody would fall off their chair. But I like biotechs. This is the time of the year where they do particularly well. And historically, not only historically do they do well, but also technically I'm seeing breakouts and I'm seeing great action. So I want to have, now I guess I'm diversified somewhat within the group. It's not like I have everything riding on one stock, but yeah, I definitely am heavily concentrated. So what percentage? I mean, I have multiple accounts, retirement, taxable. To tell you the truth, I really don't know, but I have no problems with an ETF. I have no problems putting all of my one account. I did that with the IWM. I just put one account and I just put it in the IWM because I like the small caps. That might be crazy for some people, but it is an ETF, so I feel a little bit better about that. But I've had individual stocks where I could have 50 or 60% one stock.
Mm-hmm.
And, yep. It might be a little crazy for some, but keep in mind, I'm a short-term trader.
Exactly.
I am, somewhat, there is some risk holding overnight. I mean, even the best looking charts, you can have a really bad story come out overnight, but, sticking with some of these companies that report solid earnings, top and bottom line, I think reduces the risk of them coming out and saying, oh, by the way, we're going to warn about the next quarter. Normally companies don't do that. So
sure. And that's, with some of those that I went over, obviously, I'm looking at being able to, with an intermediate term trade, take quite a bit of a drawdown, if I think the target looks good enough. So I don't want to have, obviously half of one account in it. So I do have it spread out. I don't, place as much just because, like I said, if I'm going into a longer term trade and I'm going to accept some drawdown, I don't want to have half my money in it. So, it just depends on your horizon and whether it looks good or not. So anyway, thought that would be interesting, but of course that cut into our 10 and 10. So we're going to move this on very quickly. So I'm going to go ahead and grab the screen just to show what we had. Today was pretty light, so I'm guessing people were paying more attention to us. So we only had about 24, so there's a good chance you might see yours, but let's go ahead and start with our first one of KeyCorp.
Okay, let's take a look at KeyCorp. Okay, I'm looking at a trading range here on KeyCorp. I like the stock. I like the space. I do like the fact here in June, it seems to be, beginning an uptrend. It took out these recent reaction highs around 2050. We're trading right on that level now, but we were able to break above it. So it seems like we are starting to trend a little bit higher. I do think, though, I could probably draw this line a little bit lower. Let's just call it 18.5 to 22 trading range. And we're sitting at 20.5 right now. So we're sitting almost in the middle of the trading range, but I like the group. So if I was, having to make a decision about Key Corp, I would be long. I think it goes higher, and I think it tests at 22 level.
Okay. Let's see. The most popular currently in the chat room is Dollar General, DG.
Okay, DG is challenging some overhead resistance. And I think if you take a look back at the high in April, you'll see where it had moved earlier. This is the big move down back from January through early March. Here was as far as we could get, reaction high to the upside, and then came back down. We held the early March low when we saw all the selling back in late May. This really spooks a lot of folks when you get big red candle with heavy volume, but it only spooks me if I lose the price support, that prior low, because an uptrend is made of a series of higher highs and higher lows. So here's the high, here's a pretty significant low. We bounced off of it. I think we're just in this trading range for now. So let's call it 85.5 to the downside, maybe 100.5 to the upside. If we could get a breakout, if we finish at the high of the day today and can get some volume coming in, then I think we got another shot at the late January high at 105.
Excellent. And number 2 is going to be FedEx, FDX, of course.
Yeah, FedEx, for me, had been in a tremendous uptrend. I think one of the problems with FedEx is that it just got caught up in these large cap multinational companies that just got dragged down. You can see the massive volume to the downside, but I don't think that we violated any major support levels on FedEx. So let me kind of highlight what I'm talking about there. Here was the high. We pulled back. We broke out on increasing volume late November, December, and we went on a run all the way up to 273 or so. Pulled back. Notice we have not lost the support level. Again, look at the selling and the heavy volume that took place here, but we didn't lose the breakout and the support level at 229. Continued to sideways consolidate, actually started to make a move to the upside. And then the whole trade war thing, the rising dollar, a lot of stuff has impacted FedEx, as it has a lot of the large cap stocks. And so we've been moving lower. I think that the stock has got great support at 229, 230, and I would be a buyer on this weakness the closer we got to that level.
All right. Next one, also pretty popular, Tandem Diabetes, TNDM.
A huge move. I mean, this is the type of stock for me that's very difficult to say when to pull the trigger on the sell. I mean, the volume trends have just been outstanding. And so that, when you're moving higher and the volume is supporting it, I don't care how overbought you're getting. I mean, look how overbought. If we sold the first time, and I don't remember if it was Bruce Fraser or who was on here talking about the RSI and the fact that in an uptrending market, ignore the RSI when it hits 70. This is the poster child for that comment, whoever said it. Here was the RSI hitting 70 back at the end of March when the stock was just breaking above $4. The RSI hasn't gone below 70 since then, and it's now $22. So if you used RSI solely as your reason to sell, you'd have been really upset on this particular stock. I think it's in a great uptrend. The rising 20-day moving average has been providing great support. So I think for me, as long as it continues to hold the rising 20-day, and I know you got to give it a lot of room to the downside, that I wouldn't be entering the stock because I think I have too much risk to the downside. But if I've been riding it, I'm going to continue to ride it as long as I hold the 20-day.
All right. Let's see. This one's been on a run for a while. It's in the consumer staples. Archer Daniels, ADM.
Yeah, this is a stock that Greg Schnell actually wrote about, I think, in Chart Watchers, one of the stocks in the consumer staples area. I think this is a food stock. Anyway, it's got a nice uptrend. It's been performing extremely well. And I'm going to just show you this trend line first. So you can see it's been staying along this trend line pretty well, with the exception of this one candle here. I could probably maybe even draw the line right along many of these bottoms with just this one open, this gap lower, and then move right back up above. That was really the only violation of this trend line. So I think as long as it holds the trend line, which is now at 44.50, I think it's great. The breakout level that it just cleared had a double or triple top at about 45.90. We cleared that. That would be first area of support. Rising 20-day would be second area. And then I think this trend line's a major long-term support to watch.
All right, next one up is Wayfair. W, home improvement.
Yeah, Wayfair I spoke about earlier because of this Supreme Court decision. You know, you've got to break out here above the prior resistance at 100. And so to me, that's going to be a key support level. If we get down there first, I would be expecting a bounce at the 20-day moving average, though. I think Wayfair looks great. It's in an improving industry group. Home improvements doing well. And of course, home improvements within consumer discretionary, which is just knocking the cover off the ball on a relative basis, has been for the last few months.
Yep. Tesla's been in and out of the news. Somebody was interested. I think they're holding a short position, or they wanted to get in on a short. What do you think of that?
I wouldn't short it. I love Tesla. I like the breakout recently. I think this pullback is an opportunity on the 20-day moving average. If I had shorted Tesla, it probably would have been at 360. I probably would have covered the next day when it hit 370 on the volume. The fact that it's going back down and is not holding on to the 360 level, probably, 4 or 5 years ago, I would have been concerned about that. But I've since realized that sometimes you lose support, but then you hold the rising 20-day moving average. So I wouldn't be overly concerned about Tesla unless I failed to hold that 330 level. If it fails to hold 330, then I think we're going to go back down and test the breakout that we saw at 310.
Okay, next up, number 8, Canopy Growth, CGC.
All right, well, we're hitting major resistance and potentially putting in a bearish engulfing candle. I'm going to shorten this chart just a little so we can get a better view of that candle. All right, so the prior high you can see on a candle body basis was here. On an intraday basis was just a little bit higher. And notice where we are right now on this huge move up. Big volume. I love the fact the rising 20-day is holding, but this to me is a short-term reversing candle if it holds into the close. Now, right now we have a bearish engulfing candle, but what if we finish back at 36? Then all of a sudden, or maybe 37, we'd have a breakout instead of a reversing candle. So this candle, if at 4 o'clock still looks this way, I think we have a shot going back down to 31 to test that rising 20-day moving average. But I'll be honest, I'd be a buyer there. I like the volume trends here. I think this could even be a longer term kind of a cup, although it probably goes too deep. But it still kind of gives you that same feel after a huge move up back into the early part of 2018. We pulled back. We've made our way all the way back up there. Great volume trends. I'd be looking maybe at nothing more than a short-term pullback.
Okay. REITs have been really interesting as of late. So let's go ahead and look at Federal Realty Investment, FRT.
Yeah, interesting company I used to work for back in Bethesda, Maryland. We used to audit this company. It's been a long, long time ago. And I don't know anything about it, so no insider information here. Not going to happen. That was probably 25 years ago. But anyway, FRT, I think from a technical perspective, I like the fact that we took out the recent high here around 121. We also took out this reaction high that we saw back in the latter part of, well, actually the early part of 2018, middle of January 2018. So I think 121 up to about 122.5 was key resistance. And notice when we did break through yesterday, the volume picked up, which is what I want to see. So now I'd be okay with this as long as it continues to hold the rising 20-day moving average.
Okay, and our final one in the renewable energy equipment space, China Recycling Energy, CREG.
All right, I'm not familiar with this one.
No.
Wow.
Looks thinly traded, am I right?
Yeah, it's thinly traded, and my guess is it's probably got probably only a couple of market makers. That's why you're seeing all of this crazy volatility. I mean, this stock here closed at 175-ish, but traded intraday at 220. And you see a number of these days, especially over the past few months, where we've had these big moves up intraday and then we fail. Last time we did this, you can see big volume. We looked like we were making some kind of a huge move. Then we failed, and then we drifted lower for the next 7 days or so. Same thing again at the end of May. Big move up, failure, and then we drift lower. So now we're getting this big move up today, pulling back, and unless we see strength into the close, if you get a candle like this, then probably you're going to get a gap up like we saw back in May. But when you close way off the highs, it makes me think that we're going to probably head lower. And this stock is drifting, has been drifting lower throughout 2018. So I would just say, you've got some pretty good support. If we annotate here down at about the 140, just below 140 area, probably this level at about 320. I mean, that's a wide trading range, but it's these tails that really bother me. When I see the stock intraday move up like this and then fail and come back down, those tails to the upside just bother me because it's a lot of traders getting in, and then there's a lot of supply that is out there, and it's just kind of soaking up those that are trading it to the upside. So these are stocks that I just don't get into. I used to do it, and I just lost too much money, and so we're trying to manage risk, and I think it's really hard to do it with these small stocks. So I'm going to pass. I don't like today's candle, though.
Okay, very good. And that completes our 10 and 10. Did pretty good there. Let's see, you should be able to see at this point. There they are, the symbols that we covered. I will put those up in the Market Watchers Live blog. You'll find the link right there at the top, and then you can copy these charts to your own chart list if you'd like. All right, well, we will be right back with the final market update after this message.
Volatility is back and interest rates are rising. With the markets headed into uncharted waters, ChartCon 2018 is here just in time. See how the experts are protecting themselves and watch live from the comfort of your home or office as they reveal the risk management strategies they use to stay profitable in any market. Plus, you'll get complete video recordings to watch on demand for years to come. Join us at ChartCon 2018, streaming live August 10th and 11th.
And here we go with our final market update of the day. As you can see, Dow is making its way higher, seems to have hit some intraday highs here and is getting stopped right about 24,650. And the S&P also gapped up, but does seem to have been hitting some resistance for it around 2765. NASDAQ has been down pretty much the entire day and is really trying to push up against the resistance of yesterday's close. Hasn't been able to do that, so the NASDAQ is down right now 4.83 points. The mid caps had a nice run here, nice big move up on the open. And since then, you can see we've been really trailing back down since then, heading back toward the close from yesterday. But mid caps are still up 6.32 points. Russell 2000, we've seen that strength in the techs and in the small caps. And as Tom mentioned earlier, we are seeing the weakness today as they are pulling back, probably like we were saying, the Dow and the S&P giving it a shot to kind of catch up to where they were. And now that Russell 2000 and NASDAQ, which have been showing a lot of strength, are now starting to pull back. The TSX in Canada, big gap up, and also finding a little bit of resistance here, but having a great day. TNX, the 10-year Treasury yield we can see is up, currently reading 2.911%. Commodities, big gap up, but now sort of, consolidating sideways here. DBC currently up 19 cents at 17.28. UUP is down on the day. Gold, as you can see, is a little bit up on the day. So we are seeing that reverse correlation in play right now in the short term. USO, very nice day for the oil services. And we can see that USO, the oil fund, is up after a really nice gap up, finding a little bit of resistance right now at 1390, but it looks pretty healthy. I'd expect to see it moving a bit higher still. And we covered gold. It is up slightly, GLD at 120.16. And finally, the volatility index, gap down, moving sideways, getting a reading at just under 13.5. So we're still not looking at a lot of bearishness out there. And that concludes our final market update. I'm going to go ahead and get ready for the sentiment report, but I think, Tom, you might have had a chart you wanted to share before then.
Yeah, I'm just going to, the U.S. Broadcasting and Entertainment Index, I mentioned recently, I thought that this is a group that really is starting to kind of change the character of its chart. Here on the daily chart, you can see it was downtrending, moving up. It's actually breaking out again today in that consumer discretionary space. It is the best performing industry group in consumer discretionary today. And so what I thought I could do is just show you quickly from the member dashboard here. If you go into the industry summary, and then you can see broadcasting and entertainment here at the top. If you click on that and then sort this by the scooter, you can quickly just go down and see which high scooter ranked stock within this space, which ones are pulling back, and then you can also see which ones are leading on a percentage basis. So for instance, you can see that maybe I'm looking at maybe one of the mid cap, large cap stocks. Let's take a look at, I'm gonna keep going down. Here's a large cap, Charter Communications, which is up almost 3% today. You pull this one up and you can just take a look and get an idea of maybe whether it's starting to turn the corner. It looks like it's trending higher. You got a golden cross. It's now filled this gap and it's trying to break above that. Only downside on this stock is I'd like to see a little bit more volume. But that was just a quick update to show you how you can take one area of the market and maybe look for some individual stock trades. So with that, I will turn it back over to you, Erin, for your sentiment analysis.
All right, let's get started. Okay. Okay, so let's get over here to this. Okay, so this is the list of sentiment indicators I have. If you want to get these sentiment indicators, they won't look exactly like this because I've been adding and subtracting from it, but you will find them in the decision point chart packs. Just go to your account and you can go in there, manage your chart packs, and install the decision point chart pack, and there you go. You will have all of the sentiment indicators. So let's go ahead and get started. What I want to mention before I even talk about this particular chart is that last week, if you were watching or if you saw the sentiment report on StockCharts TV, we were seeing some extraordinarily bullish sentiment among investors. We had the third highest reading since 2006 on the name exposure index, and I'll be showing you that chart. And everything else was looking very, very bullish as far as what market participants were doing. And with sentiment, it is contrarian. So if everybody gets very bullish, one of the best indicators is if you start seeing bullish covers on newspapers and on magazines, you can be assured we're getting ready for a reversal. So what we like to do is look at the sentiment, see how the market participants are doing in the market, and then we'll come up with the sentiment from there as far as what the sentiment is telling us. So in this case, I have marked it because it's not as intuitive, usually overbought, oversold, a little bit different because of the sentiment change, but we have the put call ratio, 10-day moving average for CBOE, equity, and OEX. And the ones I pay most attention to are the top two, because if you note, when we get these lows, these bottoms in sentiment, we get consolidation or we see a decline. Of course, it really gave us some warning here. We've got another one here where we had these lows. And we're looking at lows right now. We're seeing, if you look in the thumbnail, we're starting to move up slightly. And so that bullish sentiment among the investors as far as the put calls go is starting to rise, but they're still very bullish. And so that would be considered bearish for the market. So as far as put call ratio, I think it's showing bearish for the market. The AAII investor sentiment poll, we can see American Association of Individual Investors. This is a finger in the wind poll. You go onto their website and you just say, hey, I am bullish. Hey, I am bearish. And they tally that, of course, in percentages, and that's what we have here. So what I was noticing is we do see a little bit of a pullback here on bullish sentiment. So people are getting just a little less bullish, and you can see a bit of an increase on the sentiment for bears. So we're getting a little bit of a shift. You can see people are starting to get a little more uncomfortable. But last week, look at this bull-bear ratio. It was definitely in that space when it's over 2, when you have twice as many bulls as you have bears. That's a condition that really tells you to look for a reversal. People are too bullish. Right now, they're starting to pull back on that bullish feeling. And so we're seeing that ratio move down. At this point, I would read this again. We're seeing that shift. People are getting a little bit more bearish, but the bullish activity out there, as you can see with the ratio, is still at about 1.5. So I would consider AAII chart to be bearish for the market. The NAME Exposure Index, National Association of Active Investment Managers. These are the big guys, and they tell you how exposed they are to the market on the long and short sides. And as you can see right here, we had the 3rd highest historical reading since we started tracking this in 2006. And, you know, we had the highest reading back here at the end of 2017. Typically, you are seeing, these are the big guys, so they do tend to be on the right side of the market a lot of the time. But when we see exposure get extraordinarily high, that makes me worry. And I noticed when you look here from that last very large reading, you know, you can see we had a couple weeks here of, you know, basically sideways consolidation, and then we just continued up on that parabolic rally move. So these guys turned out to be the smart money, and a lot of times they are right out the gate. So you may not see you won't necessarily see what you'd expect with high bullish exposure, because these guys are a little bit more savvy to what's going on. So a lot of times you may see a bit of a delay in that decline, and we're not seeing that now. We got that highest reading last week, and we definitely got a downside move. And I think all of us at this point are starting to see a little bit of shakiness in the market. While we have the long-term trend still firmly in play, obviously we've been having a lot of volatility, and currently I think there is, you know, we are starting to see people pull back on their bullish sentiment. Now, this is the one I love, our Ridex asset analysis. This is unique to Decision Point. And what we do is we take a basket of funds. They were managed by Ridex. Now they are managed by Guggenheim, but we kept the Ridex name. So what we look at is the basket of stocks. They report every night how many assets are in their bear funds, in their bull and sector funds, and how many assets are sitting in the money market. So this is the real time. This isn't finger in the wind. This is what the money is actually doing among investors. So I find this one to be very helpful, and it gives us a really good sense of what's going on. So what I wanted to make note of is just looking at where the money flows appear to be going. And as you can see, bear funds mostly stagnant on the low side. You know, as far as investment goes, you can see it's near the lower quadrants here where we had previous bottoms. And now we're starting to see money slowly coming out of money markets. So we're getting money out of cash, and where's it going? It's going into bull funds. So at this point, I would look at this. Investors, as far as their money is concerned, are still quite bullish. They're not hedging even with the bear funds. We're seeing that stagnant. So there's still a lot of bullishness out there. All right. We did get the bull bear ratio. We're seeing that bounce off of what I was looking at as support level, you know, as far as that ratio. So I think when you see that, again, you've got the ratio is going to get smaller and smaller as the bulls pile it on as far as assets. So as it moves up higher, that's telling us that people are more bullish. And of course, looking at the money flows, we can understand how that ratio did rise at this point. So when you're looking at the real money, I would definitely say you are seeing you know, still that bullishness is still out there. And it's interesting because as we talk, as you look at where, you know, sector rotation is going on, you know that people are acting, at least saying that they're not happy with the market, you know, that they're feeling this sense of, you know, dissonance, the fact that we've got the bifurcation between the NASDAQ technology and small caps, although that seems to be changing a bit here. So with that, I always find it interesting to look at where the real money is. What are people actually doing with their money? And this particular chart, I think, gives us a great idea for that. Let's go ahead and throw those. Let's go ahead and throw the summary slides up for you so I can kind of recap what we did and give you an idea of what to expect coming into the week as far as sentiment. So the 10-day moving average, the put call ratio, it's still very oversold, but it is starting to rise. So instead of extremely bearish, as what I was looking at last week, I'm just going to move it to bearish. So we are seeing that rise, but we're still very oversold. So I would say that that's bearish for the market. On AAII, we're seeing that expansion of the bears and a contraction of the bulls, which is somewhat bearish for the market. Like I said, last week, it was, you know, we had an excessive amount of bulls. That bull-bear ratio was way out of whack. So instead of being extremely bearish, I think what we're seeing here as far as AAII is somewhat bearish for the market. So we're seeing some of that bearishness, you know, pull back a little bit as far as, you know, what people are feeling as far as the survey is concerned. Name, remember, this is the exposure of the big guys, and they have reduced it from those, you know, third highest historical reading from last week. It's still very elevated though. So even though it's not, you know, in that historic area, that is bearish for the market, especially in the intermediate term. RIDEX ratio, where's the money actually going? Bear funds are stagnant, and we're still seeing an increase in the bull funds and money coming out of the money market. So I would say at this point, that's still very bearish for the market. And so in conclusion, when you wrap this all up, obviously sentiment is still bearish. I don't think that it's quite as bearish as last week, especially when you're looking at, you know, those, again, historic readings and that sort of thing. So in general, I'm still expecting lower prices. So, you know, let's go ahead, and I'm going to look at the S&P, Tom, and let's see, what do you think? Because we have to do our Wall Street sentiment survey. So I'm going to actually grab it, and I will show everybody the previous one that we had for the Wall Street sentiment survey. So this is what happened last week. And let's take this. Actually, I'm going to go to the weekly one because we can see the actual nigger. And this is from the Wall Street Sentiment Survey. And I really do need to give him some credit here. But as you can see, we've had, we were pretty much even this last week on bulls and bears. So I found that very interesting. And we'll see. I was definitely on the lower. I know the audience last week was on lower. And Tom, I think you were also a bear coming into this week, which is, you know, kind of unusual for you, honestly.
Yeah, I wasn't bearish the market. I was just bearish the large caps because of the rising dollar. And I think the dollar now has hit resistance and is trying to back off of it. So I'm actually a little bit more bullish on the larger caps heading into next week. So my vote would be that it goes higher next week, although we do have overhead resistance as we get closer to 2,800 on the S&P.
Yes.
Pay attention to.
Yep, it looks like the poll right now, and if you haven't taken it, it's just to the right of the StockCharts TV viewer. And we're seeing at this point 46% are going higher. So I am in the minority of 35% with those lower. And then we did have about 20% who are thinking mostly unchanged. But it looks like, you know, we're really looking at people starting to feel more bullish. I still am starting to see, with as far as that sentiment, like I said, there is a little bit of that bullishness as far as, you know, where the money's going is certainly very high. So, you know, I'm feeling bearish about the market. Just the short-term sentiment, I'm just not happy with. I think we're still going to have a little bit more pullback to go. at this point.
Yeah, I think too with a lot of the dollar rise and a lot of the trade war talk, a lot of these large cap stocks have really taken it on the chin for the past couple of weeks. And, when I look at some of the areas of the market, for instance, like the transports, the dollar tran, dollar utility, UTIL, that relationship really took a tumble here over the last 10 days. And while I'm not, normally anytime that is falling, that makes me cautious. But I kind of feel like I know why that we were getting that tumble. And when I look at a couple of the key areas of the transports, like the railroads and the truckers, they've pulled back to 20-day moving averages like you would expect. I mean, you can call it whatever you want to call it, the reason for it. But I think we've made some really normal kind of pullbacks in some key areas of the market, like railroads and truckers. And I think they're poised to move higher. And I think that's going to help the S&P 500. So I think there are a lot of things pointing to a higher S&P 500 next week.
All right.
Whether or not we get through the 2,800 level, I think that's going to be key.
Yep. And I did get 2 new PMO sell signals. One was on the S&P 500. The other was on the OEX, I believe. Yes, because the Dow had already triggered that sell signal. And there you go. And it's also moving down below that rising trend line. That's really kind of what's worrying me, except for the fact that the S&P hasn't done that. We're still seeing that rising bottoms trend line holding up so far. So I think that speaks to being able to hold this support area at these May tops. But I don't think we're done messing around here at those May tops just yet. Mainly because I'm seeing this momentum shift, and we didn't even get that negative crossover before.
Yeah, and when you look at the other areas of the market, though, the Nasdaq and the Russell 2000, I mean, you see a completely different market. So I'd be much more concerned if we were seeing sell signs across all areas of the market or key areas, but we're not seeing that. And really, I mean, to me, it's very explainable because we've been seeing rates rise faster here in the U.S. than we see in other parts of the world. So that's contributing to a strengthening dollar. And anytime you get a strengthening dollar, there was a report I saw earlier, an earnings report, and a company that had been doing a lot of business in Brazil, they actually mentioned the fact that their profits suffered significantly from the foreign currency translation back into the dollar because the dollar's been so strong. And I think that's what's holding back a lot of these S&P and Dow stocks right now.
Yep. And yeah, as you can see, I mean, the Nasdaq, I don't think it'll trigger that sell signal today, but if we still see some of that pullback, we're gonna see that signal drop back to a sell signal as well. I still see a lot of softness. So
yeah, I see the softness, but I feel like I can explain the softness. And I think that softness in some of the large caps is going to continue actually throughout 2018. I think we might just be pausing here in the near term.
Yep. And there's your upcoming schedule. I will see you next week, Tom, on Monday.
Sounds good. Do want to thank everybody for joining us today. Please remember to complete the survey as you exit. We love to get your feedback. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Friday afternoon, everyone. Enjoy your weekend. Be safe, and we'll see you back here on Monday. Happy trading.
Volatility is back and interest rates are rising. With the markets headed into uncharted waters, ChartCon 2018 is here just in time. See how the experts are protecting themselves and watch live from the comfort of your home or office as they reveal the risk management strategies they use to stay profitable in any market. Plus, you'll get complete video recordings to watch on demand for years to come. Join us at ChartCon 2018, streaming live August 10th and 11th.